Today, I'm ranking all the top Layer 2 crypto projects based on their long-term potential, and I'll give you my picks for the big winners in the next bull cycle. Welcome back to the Virtual Bacon channel where I teach you how to build wealth with crypto. As a quick disclaimer, this video is not financial advice and is strictly my personal opinion for entertainment and educational purposes only. To start things off, here's why I think Layer 2s will have a lot of opportunity from this year onward. In the last bull cycle, the hype was around new Layer 1 projects like Solana, Avalanche, and Cardano, because they promised to be a better version of Ethereum without the congestion issues. If you were there around the bull market, you would remember the $50 plus Ethereum transaction fees. That's simply too expensive for the average user. I've talked a lot about Ethereum scalability issues before, but in 2023 and beyond, these issues are expected to finally be solved with Layer 2s. In fact, this is looking to be the way that scalability will go moving forward. Layer 2s have a lot of the same benefits as other Layer 1s, except that they are built on top of Ethereum. This means that users can take advantage of Ethereum's large DeFi ecosystem in a much cheaper and accessible way without compromising on security. After the cycle in 2021, we can all recognize that Ethereum is the clear winner for decentralized applications adoption. That's why I expect Layer 2s to be the future of infrastructure improvements because they sit on top of Ethereum. Simply copy-pasting more and more Layer 1s with the exact same use cases as Ethereum just not going to work. Okay, let's get into the Layer 2 projects, and I'll start covering from the C tier projects first and move up to close out with S tier in the end. So make sure to stick around to the very end. The first C tier project on the list is Aztec Network. The Aztec Network was founded back in 2017, which makes it one of the first Ethereum Layer 2 solutions. The main Aztec product is called Aztec Connect, which is a private encryption layer for Ethereum. And for the past 6 years, they've launched several privacy-focused platforms on top of this protocol, such as ZK Money, a payment solution. However, even though they're pioneers in the zero-knowledge space, Aztec Network never gained traction like other ZK rollups. This is likely due to the heavy regulation for privacy-focused applications like Aztec. It makes it incredibly hard to get listed on centralized exchanges, and it's likely why they never released a token in the 6 years lifespan. In 2023, Aztec Network announced a major pivot for their network and are moving away from focusing on just privacy to now a solution for privacy and scaling. This means the new Aztec network will be a ZK rollup for both public and private smart contracts. But here's why I still put them in C tier. Aztec isn't a ZK EVM, nor is it at all EVM compatible, which means it isn't using the same underlying technology as Ethereum and doesn't support Solidity smart contracts because of it. If you don't know what ZK EVM is, think of it as this newer technology that Ethereum developers are choosing to build with, which offers all the same language and tools for easy migration. Another downside is that Aztec's focus on privacy has proven to be a hard sell for the market and regulators. Despite being a ZK solution pioneer, if Aztec really wants to become popular in the mainstream, they will need to heavily focus on the ZK rollup scaling solution narrative rather than the privacy features. ZK rollups are the next generation of Layer 2s, so I'm not writing off Aztec just yet, as they could become competitive in the next cycle. Next up in C tier, we could have what could be the biggest underdog on this list, which is Taiko. Taiko is another ZK EVM Layer 2 coming to Ethereum, and it also happens to come from the same team who made Loopring, another Layer 2 which we'll cover in a bit. This should already give Taiko a leg up since the team is highly experienced in the Layer 2 space. Now, the main selling point of Taiko is that it will have the maximum compatibility with Ethereum among all other ZK rollup Layer 2s. So things like smart contracts, tooling, wallets, and infrastructure used on Ethereum can all be used on Taiko. The main reason Taiko is only in C tier right now is because they're still in the early phases of development. The project started in July of 2022, and they've only had one testnet so far. But if they can deliver on this super minimal and compatible version of the ZK EVM, combined with their experience of the Loopring team, this project can be a dark horse in the Layer 2 space in the next cycle. There's also a ton of speculation around Taiko's token airdrop. I'll be covering this in a future guide, so make sure to subscribe to not miss it. The next C tier project we have is Loopring. Loopring was actually the first Ethereum ZK rollup and is focused on decentralized exchange infrastructure with their own DEX built on the platform. Since Loopring's adoption is solely dependent on having their own exchange and have large transaction volume, it'll be much harder to gain TVL and a whole ecosystem than other general purpose layer 2 networks. And that's probably why Loopring's TVL and the LRC token are both down by over 90% from their bull market highs. One upside to consider is Loopring's long history and wide exchange adoption of its token. You can practically buy the LRC token on all major exchanges since it has been around since 2017, and they've built a large holder base over the years. Loopring also understands their retail trading adoption, so they heavily lean into the retail crowd whenever possible. It's one of the reasons you might see it constantly trending on the popular stock tweets and landing partnerships with GameStop. Technically, Loopring is a layer 2 coin, but it's really only a layer 2 built for their own DEX. The LRC token currently sits just outside the top 100 at a $300 million valuation. I think this is a pretty high valuation already, hence why it is currently in C tier. Considering that the Loopring team is reinventing themselves and working on the Taiko project now, I think Taiko would be the better bet for the future if you want to bet on this whole narrative. Once the official announcements are clear regarding how the Loopring LRC token will fit into Taiko and whether there will be a new token, this tier list might be shifted and Loopring might fall out of this list and we might need to focus on Taiko instead. All in all, these two projects combined can make a real splash in the layer 2 wars, so definitely watch out for this team. Next up in C tier, we have Gnosis Chain. Gnosis Chain was formerly known as the XDAI network and is also one of the first Ethereum scaling solutions launched back in 2019. However, their technology is pretty old and it's not on par with new technologies like optimistic rollups and ZK rollups. Gnosis Chain uses side chains with its own proof-of-stake consensus mechanism. This means it's essentially a copy of Ethereum but with much weaker security, and you can bring assets over through a bridge since it's a copy and it offers full EVM compatibility with all Ethereum tooling and wallets. However, its TVL numbers or total value locked and the real ecosystem adoption is nowhere close to newer layer 2s like Arbitrum or Polygon. So this would be an uphill battle as Gnosis Chain does not offer either higher scalability nor better security guarantees than the new rollup technologies. The Gnosis GNO token is down about 80% from its all-time highs and is just outside of the top 100. Personally, I don't think this network will die as it's still being used as a sister network for Ethereum core developers. For instance, the Ethereum 2.0 upgrade was first implemented on Gnosis Chain to test the stability. But that's about all the prospect I have for Gnosis. It will remain to be a legacy Ethereum sister chain. Next up in C tier, we have the Scale network. Scale network is another older sidechain project that launched back in 2020. This means Scale technically functions also as a standalone blockchain with its own validators and its own consensus. Even though Scale was decently popular in early 2020 during DeFi summer, today it fails to attract most new applications since developers typically choose the top layer 2s that we'll also cover later in the video. Again, this really shouldn't be a surprise since Scale's technology is technically last generation. Even though it is a legitimate layer 2 project, it just isn't as attractive as our other picks. The SKL token sits outside the top 200 today and is valued at just over $100 million, which makes it one of the lower valuation projects on this list. Okay, the next C tier project we have is Cartesi, which is an interesting one. Cartesi is very unique from other layer 2s because it focuses on building application-specific rollups instead of broad general-purpose layer 2s. Cartesi also has a main selling point that is not seen anywhere else, and that is that it uses the Linux runtime as its virtual machine instead of the EVM. If you're not familiar, Linux is the most popular operating system for all enterprise computing in the world today. So the fact that Cartesi supports Linux is pretty interesting. Every decentralized application built on top of Cartesi has its own rollup app chain with a dedicated CPU, and this will help a lot with computational work. But while this solution sounds promising from a technology perspective, it still hasn't seen real-world adoption so far because most layer 2 Ethereum applications today focus on DeFi, NFTs, and gaming, which prefer the Ethereum Ethereum virtual machine and the same technology stack anyways. They don't really need a Linux environment to run complex cloud computing applications. The main selling point of Ethereum is still to have money Legos and DeFi and tokens and assets that you can play around with. So the potential of doing a ton of complex computation on-chain using the Cartesi network is still up in the air. The Cartesi token is also just outside the top 200 at around $100 million in valuation. It is a relatively cheaper pick on this list. And rounding out the C tier, we have Myria. Myria is a new layer 2 that you might have heard of in the past 6 months or so. This is a layer 2 built on top of Starkware's technology, and it focuses on gaming and NFTs very similar to Immutable X. The main reason I even mentioned this project in the first place is because they usually get grouped as a new layer 2 solution for Ethereum. But I want to make it very clear, in reality, Myria wasn't built to be a general purpose layer 2 ecosystem. Instead, it is focused on growing only the core Myria platform. On the Myria layer 2, you can issue and trade NFTs and integrate games, but this all have to happen on the Myria application. It is not an open ecosystem that anyone can develop on. All of these integrations and games and NFTs have to go through Myria, the company, as a business deal. Myria essentially acts as a Web3 game publisher similar to Gala Games, but with their own layer 2 solution. And that's why I'm putting it in the low C tier, as I wouldn't consider this project to grow alongside the general layer 2 adoption. Myria is more of a gaming project than a layer 2 project. Okay, that closes out C tier. Let's move on to the B tier projects. By the way, if you're enjoying this video so far, don't forget to give this video a like and subscribe if you haven't already. I'll be doing more tier list style videos like this in the future, so let me know which type of narrative you want me to cover in tier list next. Kicking off our B tier, we have a name you're probably familiar with, and that's Immutable X. Immutable X uses ZK rollup technology to offer a zero cost and instant transaction environment, which makes it the perfect layer 2 solution for NFTs and gaming that relies on Ethereum. This focus on gaming is really what sets it apart from other solutions like Arbitrum and Optimism, which cater to a broader range of applications. The one knock I have on Immutable X is that it doesn't support smart contracts, so it really shouldn't be considered a general purpose layer 2 either, but rather more of an application specific layer 2. Again, you can issue and trade NFTs easily, but you cannot build arbitrary apps on top of Immutable X. Even so, Immutable X still managed to gather over $100 million in TVL since 2021, but from what I've seen on DeFi Llama, that growth number has largely stagnated. There are currently over 100 gaming companies using Immutable X, such as ESL, Ecomi, Illuvium, and Gary V's Book Games. But most of them, if you look deeper, aren't actually games being developed. Instead, there are more like partnerships for marketing purposes. Just look at the ESL announcement. This seems like big news on the surface, but ESL isn't actually building any games using Immutable X. They're only just issuing NFTs with it. Today, Immutable's IMX token sits at a $700 million valuation, which is about half of its all-time high from the 2021 bull run. So it's not exactly on that big of a sale compared to other cryptos. Overall, Immutable, the company itself, is still one of the few Ethereum solutions and companies with solid Web 2 gaming adoption. The only other more competitive choice right now is probably Polygon. Next up in B tier, we have Consensus Linea. And if you haven't heard of the Linea name before, you definitely would at least recognize Consensus. That's because Consensus is one of the core development firms behind Ethereum infrastructure projects like MetaMask and Infura. But now they're building their own ZK EVM layer 2 called Linea. Linea enables existing dApps to migrate from Ethereum mainnet without any code changes or smart contract rewrites. This approach is supposedly more compatible with Ethereum than all of the current ZK solutions like ZK Sync and Polygon. So this should help with development time and ease. If you're interested in how all of these ZK rollups and ZK EVMs differ in terms of their compatibility with Ethereum, check out this blog post from Vitalik himself outlining the different types of ZK EVMs based on compatibility. In general, he ranks them with 3 types. Type 1 is the most compatible, which includes Tyco, Linea, and Scroll, which we have on the list, and Type 2 and Type 3 are projects like ZK Sync and Polygon. What's also interesting to consider is that MetaMask and Infura are both developed by consensus, so I'd also expect them to be natively supported within Linea. But before we get ahead of ourselves, you cannot invest in this layer 2 because this layer 2 does not plan to have any token. According to a consensus blog post last December, they felt it was too early to discuss the launch of a Linea token. However, they did express their intention to reward users who help test and improve Linea, and they've received a good amount of funding. So maybe there could still be a token airdrop coming somewhere in the future. If you're interested in a guide to outline how to qualify for this airdrop, let me know in the comments. Even though Linea is still an early stages project, I still put it in the B tier mostly because it's made by consensus. So this will make sure it is a super legitimate project. Moving on, for the next B tier project we have is Scroll. Scroll is another up and coming ZK rollup that aims to be the native ZK EVM scaling solution for Ethereum, aren't they all? And again, they do this by replicating EVM at the bytecode level, aka the base level, which means developers can again deploy their existing dApps on Scroll's ZK EVM without any modifications or additional audits. Scroll themselves calls this EVM equivalence, which means even from a code level, it looks nearly identical to Ethereum. Again, referring to the blog post from Vitalik himself, these high compatibility Type 1 ZK EVMs take a long time to develop, but will be the future of Ethereum scaling. So this also explains why these three projects are still in their earlier stages in comparison to the other ZK rollups which are already live in the market today. Now, Scroll has been in development since 2021 and is currently in its last alpha testnet. The mainnet is set to launch sometime this year and will likely be the third ZK EVM to launch after ZK Sync and Polygon. So we shall see how developers react when offered multiple ZK rollups with varying levels of compatibility. Will this actually make a difference, and will they choose the easiest development route, or will the most established and the oldest ecosystem win with already a mature user base? Time will tell. There isn't a token for Scroll just yet, but there could be a potential airdrop in the near future. So let me know down in the comments again if you want to see this airdrop guide. Okay, shifting gears from the ZK rollups, we have another B tier project called Mantle. Mantle is the first modular Ethereum layer 2, meaning its blockchain is made up of several specialized components rather than having everything built on top of the same layer. Like so many other Ethereum layer 2s, Mantle is also EVM compatible, so again, developers can easily migrate. In terms of category, Mantle is technically a optimistic sidechain, which gives it the same level of Ethereum compatibility as Arbitrum and Optimism, but it does function as its own separate chain with its own validators and its own consensus. Mantle also takes both storage and transaction processing off-chain, which does make it super fast and cheap, and it will actually be much faster and cheaper than all other major optimistic rollup layer 2s like Arbitrum and Optimism. This is because they can neglect all the storage fees that's required to store the rollup transactions. However, the main sacrifice is, in this case, decentralization because of this sidechain design. Another interesting point, again, is that Mantle is made by Bybit Exchange and is governed by its separate investment DAO called BitDAO. There is currently a proposal going on for the BitDAO to change its BIT token to the Mantle token and transition all of its branding. And it looks like this will pass, which means the BitDAO's BIT token will be the Mantle token that you can already buy right now. Mantle will use the BIT tokens to process transactions and pay for gas fees, and it will help grow the ecosystem and all of its project and be used to incentivize stakers. So if you want to invest in Mantle, the BIT token right now would be the move, and it currently sits in the top 75. So depending on how you see it, this spot could be interesting. Mantle will technically become the unofficial Bybit layer 2 chain, and it's being built like a layer 2 instead of a random layer 1 like a KuCoin chain or OKX chain. Bybit is really taking their time with their technology, so there is real adoption potential. The BIT token is also the only exchange token for Bybit, and they have done large buyback and burn campaigns with the exchange's revenue before. So there are a lot of good things built around this token. The token migration will happen really soon, apparently in June, and the mainnet launch for Mantle Network will happen sometime this year. This is definitely a project I'll keep a close eye on, and if all things go smooth, maybe this project can even move into the A tiers. Alright, the last B tier project we have is Metis. Metis is another optimistic rollup-based scaling solution. And stop me if you heard this before, but again, it enables fast, low-cost transactions and seamless Ethereum integration, blah, blah, blah. There isn't too much to be said about Metis technology, as it is pretty similar to that of Arbitrum and Optimism. However, as Arbitrum and Optimism are both rolling out new solutions, Metis still only has one optimistic rollup network from the early days. One good thing going for Metis is their proven track record to attract a real ecosystem. In the 2021 bull market, if you were around then, Metis was considered the third largest and third best layer 2, only behind Arbitrum and Optimism. We can see this in their TVL growth as well, which once peaked at over $700 million, but this has since stabilized around $120 million in the bear market. For comparison, this is only about 5% of Arbitrum's current TVL. That's not to say Metis has bad technology now. The chain is real and still booming. There were DEXs, stablecoins, lending, farming, NFTs, and all the typical Ethereum DeFi jazz that were all live on Metis. If Metis can reinvent themselves and build up the ecosystem again, I could see them being another winner in the next cycle. Another good thing to note is that Metis's current valuation is relatively cheap at $260 million fully diluted, which is down 93% from its all-time high. And the majority of the Metis token supply has already been released, which also is another plus for its tokenomics. There isn't that much selling pressure coming in the future. Again, this is a higher risk, higher reward play, but adoption is the hardest thing to achieve in the crypto space, and Metis has done it before, and that's why I'm putting them in the B tier. Okay, I'm tired of handing out C's and B's, so here are the real all-stars, and let's go into the A tier layer 2s. First up in the A tier, we have ZK Sync. ZK Sync made its headlines back in March 2023 when they launched their ZK EVM called ZK Sync Era. This launch was an essential turning point for Ethereum and the entire ecosystem, because for a long time, a fully EVM compatible ZK rollup was only considered a theoretical possibility that might never happen. But today, with $250 million of TVL deployed on the network, the dream is real. ZK Sync Era is the largest ZK rollup today, even though it's only been live for a couple months as of this recording. And for comparison, the Polygon ZK EVM, which launched around the same time, only has around $10 million in TVL so far. ZK Sync Era allows for 2,000 transactions per second today, which is on par with alternative layer 1s like Binance Chain and Avalanche. And this is time to mention why ZK rollups are so important and such a big revolution in the layer 2 space, and that is because they have real-time security guarantees by constantly syncing with Ethereum at every transaction. This means you can bridge funds from ZK Sync back to Ethereum without delays, which is much faster than the 7-day withdrawal delays on the native bridges of Arbitrum and Optimism. Today, ZK Sync is clearly the leader in ZK rollup solutions, but the reason it's in the A tier instead of S tier is mainly because ZK Sync Era is still early on mainnet, and also consider the ZK Sync token has yet to be released. We still don't know whether you can buy the token in a public sale sometime in the future, or if the token will ever come out as an airdrop. But people feel like the chance of an airdrop is high, which could explain why the ZK Sync network TVL is so high right now. A lot of people have deposited money, likely just to farm the airdrop. So once the token actually comes out, who knows if this numbers and volume will continue. If you want to learn more about ZK Sync or see the steps I'm taking to qualify for the potential ZK Sync airdrop, make sure to check out my ZK Sync deep dive video, link in the description. Moving on, for the next A-tier project, we have Starkware and its StarkNet Layer 2. Starkware is a crypto development firm focusing on improving Ethereum's scalability using ZK technology, and they have two main products, StarkX and StarkNet. StarkX is an application-specific scaling solution framework used by large projects like DYDX, SoRare, ImmutableX, and Apex, and it mainly provides a zero-cost off-chain computing for exchanges, marketplaces, and gaming. Starknet, on the other hand, is a permissionless and decentralized ZK rollup layer 2 built on Ethereum, which allows any dApp to achieve limitless scalability while preserving Ethereum's composability and security. And I cover both of these solutions in depth in my Starkware and Starknet explainer, and I'll also leave that in the description. For the sake of the token investment potential, we need to focus on Starknet because that's the actual layer 2 with a token. As of right now, the Starknet ecosystem is still in its early stages and is very limited. There are a couple decentralized exchanges, NFT marketplaces, and lending protocols, but the user and volume is still quite low at only $10 million TVL. Starknet also uses its own proprietary programming language called Cairo, which is very different from the Solidity language used in Ethereum and most other layer 2s on this list. This could be a hang-up for developer adoption in the future, since all Ethereum developers already use Solidity every day. In terms of EVM compatibility, Starknet also lags behind most other layer 2s. Not all the tooling will work, and in fact, you need to set up a separate wallet to use Starknet. MetaMask does not work. Nonetheless, technology is only part of the puzzle. What's much more important is the adoption. And lucky for Starkware, their StarkX product line is one of the most widely adopted scaling technologies in the 2021 bull market. To this day, the StarkX technology still secures over $500 million in TVL. So despite being a bit behind in the general purpose layer 2 ecosystems, Starkware and Starknet are still in my A tier because their enterprise adoption is second to none. If you used any major DeFi application on a layer 2 in the last bull market in 2020 and 2021, chances are they were using Starkware's technology. And that's why I'm still optimistic on Starknet's future. It will take a while to release, and it's not as obvious of a pick as other layer 2s that you can just plug into MetaMask. But Starknet is a darling in the Ethereum community, and it has been one of the largest competitors to zkSync since forever. Okay, while zkSync and Starknet battle it out in the A tier for the top ZK solution, let's move on to the real all-stars and the S tier projects. My first S tier layer 2 and probably my favorite project overall on this list is Arbitrum. Arbitrum is the #1 Ethereum layer 2 solution today based on adoption and TVL. With $2.4 billion of total value locked and 300 plus DeFi protocols deployed on the network, it's the default choice for Ethereum developers looking for an alternative layer 2 in the Ethereum ecosystem. Arbitrum employs optimistic rollup technology, which makes transactions cheaper and faster than Ethereum while maintaining the same security again. Now, other feedback I've seen from developers is that building on Arbitrum is practically identical to building on Ethereum. It literally takes half a day to deploy to Arbitrum, and all you need is to change the network settings. Arbitrum also uses Ether ETH as its native token for gas fees, which has definitely helped it gain popularity in the Ethereum community. And most centralized exchanges today support the Arbitrum network for Ethereum withdrawals, so onboarding onto the Arbitrum network is just as easy as using Ethereum. But Arbitrum does have its drawbacks. The first is that the ARB token cannot capture transaction costs, as it's only used for governance and staking. This means that the network activity doesn't necessarily help the token. Despite that, the ARB token is already in the top 50 rankings, having just launched back in March. Personally, if I can only buy one coin to capture the layer 2 narrative, it would be Arbitrum. Even though the transaction fee and revenue sharing aspects are yet to be seen, I still expect this narrative of Arbitrum being the top layer 2 coin to continue to carry the project forward. There isn't much to say. If you want the best layer 2 coin today, my choice is Arbitrum. You simply cannot beat such a lead in adoption and ease of integration. Now let's dive deeper into the downsides of optimistic rollups like Arbitrum. And it's time to introduce the next S tier project on our list, which is the Optimism network. Optimism was actually the first optimistic rollup solution to market and currently has $900 million in TVL, which makes it the third largest layer 2 and sixth largest network overall. Optimism carries about the same goals as Arbitrum, which is to scale Ethereum transactions by batching and offloading computation to a separate network, and doing so while benefiting the core Ethereum community. Optimism is also widely loved by Ethereum fanatics. However, Optimism and Arbitrum have some important differences. The first is Ethereum compatibility. While Arbitrum is fully compatible with the Ethereum virtual machine and lets developers seamlessly migrate with just half a day's work, Optimism, however, requires minor modifications to the existing smart contract code due to its use of the optimistic virtual machine, also known as the OVM. The second key difference is data availability. Arbitrum stores most of its data off-chain, relying on centralized validators to maintain the data and share it with the users when necessary. This approach gives Arbitrum super smooth user experience, but it is somewhat centralized based on the validator choices. However, as Arbitrum claims, they do have this any-trust guarantee protocol in their algorithm, which states that as long as one validator stays honest, the system can continue to function. Optimism, on the other hand, stores all of its data on-chain on the mainnet Ethereum, and this ensures that the data is available to users at all times. This means even if Optimism validators are dishonest about the transaction data, people can always verify them by reading directly from the main Ethereum blockchain. This design is definitely more decentralized, but it does sacrifice on gas costs. Optimism also introduced their biggest upgrade this year called the Superchain. Simply put, Optimism wants to become an interoperable network of chains, creating an umbrella network consisting of many separate layer 2s. This would help onboard new layer 2s with specific use cases with the OP stack. Even though we're still at the early stages of this Superchain initiative, they still have really good adoption already. Coinbase already announced that their own layer 2 called Base will be part of the Optimism Superchain. Popular VC firm A16Z has also joined as a contributor and started developing their own OP stack client. Overall, Optimism is lagging behind Arbitrum in terms of TVL and user adoption, and their architecture is slightly less compatible with Ethereum. But unlike Arbitrum, which focuses on the adoption of its one core layer 2 network, Optimism is heavily expanding its layer 2 technology stack as this open source umbrella layer 2 network that is super decentralized as possible. And despite us being in the bear market, Optimism's OP token recently hit an all-time high in March of this year and currently sits at $500 million and rank 80 in the market cap list. But don't let this low number fool you, however, as the OP token supply is largely still locked and in the hands of insiders. The fully diluted valuation of Optimism is already over $7 billion. I'm closely watching this token supply unlock in the next cycle, and once more tokens are circulating, I could see Optimism push into the top 50 if not the top 30 coins. Okay, rounding out the S tier and the final layer 2 project, we have Polygon. Formerly known as the Matic network, Polygon is one of the oldest and most dominant Ethereum layer 2 solutions. And in case you didn't know, the Polygon network consists of an entire product suite and isn't just one layer 2 chain. Polygon supports all types of layer 2 technologies like a POS sidechain, a ZK rollup with ZK EVM, application-specific chains with Polygon supernets, as well as any future solutions potentially focusing on privacy. This Swiss Army knife approach makes it a top choice for all kinds of Ethereum applications today. Although Polygon doesn't stand out in the crypto degen and DeFi crowd against Arbitrum or even BNB chain, Polygon does shine in enterprise adoption. They really know their positioning well, especially focusing on building partnerships with major enterprises like Reddit, Starbucks, Nike, Stripe, Adidas, Adobe, Meta, Disney, and so many others. Now, that's not to say Polygon is all talk and no users. They also have released the second ZK EVM to mainnet ever. In 2021, Polygon acquired Hermes Network and Mirror Protocol, two of the leading ZK rollup solution teams building on Ethereum, and combined they formed this initiative called Polygon Zero. After 15 months of development, we now have the Polygon ZK EVM, which is a fully fledged ZK rollup that you can use today directly in MetaMask. So now within the Polygon umbrella, there are two public networks, which are the old Polygon sidechain with $1 billion in TVL and the new ZK EVM that still doesn't have much traction yet. On the enterprise side, they have the Polygon Supernet platform, which allows any company to launch their own layer 2 network piggybacking Polygon for its security. I understand why from a single point of user adoption or technology perspective, Polygon is not the #1 solution, but it's this exact reason that makes them super flexible. Who knows where the future of Ethereum layer 2s will go, but no matter which solution wins out, you can bet that Polygon will be there to capture the interest. Chances are a good amount of you hold the Matic token, and I also hold it in my personal portfolio. In my opinion, holding Arbitrum and Matic tokens should cover you for all of the layer 2 adoption growth in the future. Arbitrum would be my #1 pick for a layer 2 coin, and Matic Polygon would be the #2. If you want to see my predictions for Arbitrum and Polygon in the next bull cycle, make sure to check out my top 7 altcoins video linked also in the description below. Okay, that wraps up all of the layer 2s that are worth mentioning in the market today. To recap, I expect layer 2s to be one of the top narratives in the next bull cycle and to be the future of Ethereum. But despite this, we likely won't have 10 layer 2s all dominating in the top 50 coin rankings. So hopefully this list can help you position yourself and see which top projects can actually break into the super dominating top project list. Remember, most of the adoption of one crypto sector usually goes to the top 1 to 3 projects. Maybe there are 5 solutions max. So the competition will be fierce. If there's any layer 2 projects you think I missed, let me know down in the comments. And if you like this content, join my free newsletter on virtualbacon.com with over 12,000 friendly readers. Every week I write about the latest market events, the hottest narratives, and my personal investing insights. And we covered most of these layer 2 ecosystem in depth, but at a much earlier date. Remember to like and share the video with a friend who is also interested in layer 2s. Thanks for watching and see you in the next one.